There's a race going on in the industrial sector to modernize, technologize, as well as decarbonize. Following 5 years of underinvestment, industrial companies have a great deal of catching up to do, and that may be a setup for some outsized investment opportunities. Hello and welcome to Raise Your Average. I'm Pierre Daly, and with me is Mike Philbrick from Resolve Asset Management Global. Our very special guest is Ivana Delevska, founder and chief investment officer at Spear Invest, sponsor of the Spear Alpha ETF, ticker SPRX. So stay tuned, hit that subscribe button, like us, and let us know what you think.
The views and opinions expressed in this broadcast are those of the individual guests and do not necessarily reflect the official policy or position of advisoranalyst.com or of our guests. This broadcast is meant to be for informational purposes only. Nothing discussed in this broadcast is intended to be considered as advice.
Ivana, welcome to Raise Your Average, and thank you so much for joining us. It's great to have you.
Thanks for having me, Pierre.
So, Ivana, to kick things off, tell us about your background, the arc of your career, and your journey to launching your own advisory firm and the Spear Alpha ETF.
Sounds great. So I spent 15 years researching industrial and industrial technology companies. And what I realized over the past 3 to 5 years is that technology is becoming a core aspect of a lot of traditional enterprises. So previously, technology would have been one small subsector that was mainly consumer focused. So you had a lot of home delivery, streaming, more recently telehealth, but those would be the type of companies that fell into technology. And now what we're seeing is technology is a critical part of pretty much every enterprise and every industrial company. So what we try to do is understand what products this company use, how are they going about their digitalization journey, and that's how we find a lot of our investment opportunities.
What has your research uncovered? What are some of the sort of glaring opportunities that you like to talk about?
Absolutely. Industrial companies and even broader enterprises are behind in technology adoption, and that's driven by several factors. One is they're much slower moving than the consumer, so the consumer can switch on and off button in what they like and what they don't like. For industrial companies to adopt something, or to adopt a new technology, they need to spend quite a bit of research in understanding what it is, make sure that that technology is going to be there for the long term. And a lot of these transformations are actually pretty costly. So you really need to be confident that you're going to get the returns on your investment. The other thing that we've seen is that compute power wasn't really there. So it would take companies days to simulate a process or simulate a product. So really that improvement in compute speeds is creating and opening a whole new market for many companies. And the other one is 5G connectivity. So connectivity is very important. You can't have your internet break down during a refinery overhaul. So 5G adoption is really going to drive another layer of, like, once you have reliable internet with low latency, that's really going to drive adoption of a lot more technologies. So we see AI as a big opportunity. This is a market, this has always been a core theme for us, but 5 years ago, we didn't really have any actual investment. So we would be doing a ton of research, but there were no companies that were doing AI at scale or providing AI solutions at scale. Today, that picture looks very different. So AI has gained broad adoption, for example, in cybersecurity. All of the new cybersecurity next generation products are based on AI. So it's really machine learning going through a lot of data, finding anomalies, and that's how you prevent the most advanced cybersecurity attacks today. So we really try to find, well, who are the companies that provide the hardware and the software for people to be using this technology. And NVIDIA is an example of a company where their background was in something else, was really in graphics,
Right.
mainly for gaming, but they realized that, hey, actually this product can be used for AI. So they kept building on it, and now they launched a software offering that can serve as the backbone for companies. So that's really kind of going back to your point, why are companies slow? You didn't really have these products 5 years ago. They're just getting launched today.
And how have you seen, is it mainly your expertise or viewpoint that these potential enhancements are more sort of software and AI based, things like how do we maximize oil field production, logistics from point A to point B for whatever the product is? Or are you seeing some other technological advancements? And I'm going to use a crude one here just to sort of more physically based. So, for example, fracking in the oil and gas space was a huge technological advancement. Wasn't necessarily software based, but are you seeing both of these types of dimensions and how are they complementing one another? If there are in fact both happening at the same time, are they complementing one another? Is one enabling the other to some degree? What are you seeing as the sort of the dimensions of all the
Yeah, so we see a lot of overlap. So that's a very good point where really like before we would have like these six different themes that we would focus on. Right now, a lot of them are actually overlapping. So if you look at one of our other large themes is decarbonization, a lot of the software technologies are actually enabling companies to come up with new products and to innovate. So things like simulation tools that you can use that are software based, you can actually use them to come up with better battery technologies. And that way you reduce really the production cost of the battery, you enable the cars themselves to be cheaper and the product to be more economical. So we absolutely see an overlap across both software and hardware.
Amazing. And so how are you, so you've got this pretty wide lens that you're viewing the world under. Are there any particular areas or companies? I don't know how much you want to go into the specifics of corporations that sort of focus on areas that are particularly relevant for you. So that's a pretty wide scape of opportunities that you're purviewing.
Yeah.
How are you parsing through that and sort of figuring out what's optimal? Or is it bottom up? Is it top down? A bit of both? How's your research team tackling that?
So we cover about 100 companies that follow in these six themes. We do some top-down research on the themes, but where we really differentiate ourselves is on the bottom up. So we will do customer visits, we will talk to competitors, we will visit facilities, do mine tours, we do very strict diligence on the reported financials. So we're looking for liabilities that are not reported, potential risks, and we've uncovered in the past major accounting overstatements, environmental liabilities. So we do a very thorough bottoms up. But we have a pretty thorough bottoms up process.
Fantastic.
And
can you talk a little bit more? Just one more
Yeah.
question. Can you explicitly discuss the six themes? Because I'm not sure everybody and all the listeners will know that, and then maybe we can circle back for you.
Yeah,
Pia,
yeah,
if that's
perfect,
okay.
perfect. Go ahead.
Yeah.
Absolutely. So digitalization, manufacturing digitalization, that probably is the largest theme in our portfolio. The second theme would be decarbonization and the environment. The third would be robotics and automation. AI would be fourth. And fifth is space exploration. Sixth is photonics. So as you can see, a lot of our opportunities or what we talked about are really more into the number 1 through 4 themes.
Right.
Space exploration is one where we're doing a lot of work on. We think it's going to be a huge market, but there is really no companies today that have scale, generate cash flow, have proven unit economics and business models that we can really underwrite. And same thing with photonics. There is a lot of innovation going on in 3D printing, but we're really looking for companies that have dominant market share, that have a differentiated product. So we're not really, the market is still too early to have those types of opportunities.
And photonics, you mean even that would include something like quantum computing and
So there would be, it would mostly be, so like today it would mostly be 3D printing is the largest kind of like use case for it. But it has a lot wider applications. But back to the point of
kind of like the way
publicly traded companies that we can invest in, these are really not the sweet spot of what we're looking for. We're really looking for like few billion dollars of enterprise value, a billion plus in revenues. That's really kind of the established companies. All of them are pretty risky. Pretty much everything you do in technology, like you really need to stay ahead of the game, but at least they have proven business models and economics.
I noticed that in your ETF, you hold, I think your seventh or eighth largest holding is Cameco. So not really a technology stock or technology related, but related to your themes, obviously.
Yes,
and how far? And
so that would be related to our
yeah,
energy transition
right.
theme. We really like nuclear as a fuel. Basically, it has many benefits in a balanced energy policy. We think people underestimate the aspect that nuclear and uranium is really small percent of the total production cost to generate the electricity. And therefore, small changes or even large changes in prices of the fuel will not really change the price of the electricity generated. So that level of energy security that it can add, we believe makes it a core fuel to have in your portfolio.
Yeah, very, very interesting.
Yeah, we
How you've got this unconstrained approach, across these six themes.
Yeah, we had Nick Picard. Obviously, he runs the uranium fund in Canada for Horizons on talking about that very fact that uranium prices can triple and it has no impact on the cost of the electrons coming out the other end of the fuel of the electron maker, if you will, the power plant. Is there anything else that's particularly exciting in the uranium space? So we've got this, obviously a zero carbon, close to zero carbon. You have to build the plant and all that good stuff. And you have a uranium mine to figure out what to do with the ESG concerns on. So there's not zero hair on that, but there's a little bit. But what are the other main facts that make you so sort of bullish on uranium and that as an energy source? So low carbon, low cost to output ratio. What else is on your list there?
Well, the other aspect that we really like is that this has been a fuel that's been largely ignored. So if you look at the supply-demand dynamics, this market has been in oversupply since the Fukushima disaster. So the producers have been able to bring it into balance, even with demand being flattish to declining in some regions. So really, even prior to the geopolitical concerns, this market was more or less in balance with some potential upside. Now you add geopolitics on top of it, and all of these countries that have abandoned nuclear energy will now have to come to the drawing board and reassess it. So we think there is going to be more and more countries that have to take a look at it in a different way that they had been previously looking. And China has been a huge driver for demand. They just announced 6 new nuclear reactors. We think that's going to keep surprising to the upside just because of the benefits we talked about.
So it's a nice decarbonization play as well. And so,
Yeah, I love it.
Yeah,
I love what I love is the unintended consequence of, the play on the unintended consequence of ESG. We realize that you're also focusing on the actual technological efforts that are being made to decarbonize. But it's interesting how, I'm talked about, in past conversations, I've talked about, Germany and it's, misfiring in terms of closing down half of its nuclear plants a decade ago, and now finding itself, dependent on France for a lot of electrical generation, which ironically is nuclear. And,
Yeah, those are
yeah,
like the funny things that get generated as a side effect of
but
of policies.
and you can see where Germany would now, they've curtailed their plans to mothball their nuclear. And you can see where now they might, they're actually forced into a situation where they have to reconsider, developing new plants or reopening their old plants. So, yeah,
Yes, exactly. The reason they gave is that they don't have the fuel supply. So, I mean, that's a lot easily solvable
yeah,
problem than the other fuel supply that they need. So, yeah, I completely agree. I think everybody's going to be coming back to the drawing board,
yeah.
um, especially for these plants that don't necessarily, they're not like at end of life or anything like that. They can still be operating.
And in the meantime, they're ripping up the countryside for coal with these
Yeah,
Yes.
exactly.
with these.
Speaking of unintended consequences.
Yeah.
Yeah. So and extending that unintended consequence, are you seeing anything in any other areas where you've seen an underinvestment? So we had Fukushima, we had a significant underinvestment in that whole area on the supply side and a shutting down to the demand side, but now that's starting to rectify. Have you seen any consequences of ESG in that in more traditional fuels, more hydrocarbon-based fuels in the oil and gas space? Anything there that you can triangulate as similar or that you're keeping your eye on for the portfolio?
Yeah, absolutely. So we think the whole metals and mining space has been underinvested in. And the reason is because we had a small industrial recession in 15 and 16. And as things were starting to improve, COVID hit. So people really didn't get the chance to build capacity and invest in material. So that's why you're seeing commodities, even with small surprises in demand, or small supply shocks, they're like all prices are skyrocketing. So another area we really like is
Mhm.
lithium mining, and
Mhm.
this is a similar situation to um, nuclear, where the market has been extremely volatile in the past, because even though everybody is interested in electric vehicles, you didn't have a fleet of vehicles that lithium is really supplying. Um, is really adding to, right? So you have all these expectations of EVs coming, but no real demand. So the market was pretty tight, then went into a complete oversupply, and then COVID hit, and that made it even worse. And that's another area where we think now, with oil prices where they are and with gasoline prices where they are, EVs are 2 times more economic on an operating basis. So that really makes the case for electric vehicles today, and the case for lithium. So prices have like skyrocketed. I think a mistake that people make is looking at the spot price. It's similar in the uranium market as well in that sense, because the contracted price is generally lower, but it's a lot more stable. So you can figure out basically at what level these companies are contracting, and therefore model that out into your DCF model and come up with pretty solid upside and price targets. So yeah, so lithium is another area. We like the other commodities, like copper is an example, but the issue is that it's very economically sensitive, and there is a lot of uncertainty in the economy today,
Right.
with rates increasing, with China shutting down. But that is an area that we've been invested in the past. It's an area that we're going to come back to, but we would like to see a little bit more clarity on the demand side, to be able to underwrite an investment.
Speaking of inflation and rates and economic slowdown, how are you viewing that currently? Is the new sort of effective discounted cash flow rate, has it been factored in your opinion? Do we have more pain to go through? Because certainly on the resource side, your discounted cash flow is offset a little bit by the robustness in the commodity price. So commodities are doing well because the commodities are up in price and they create larger cash flows. And so when you do this discount on the mechanism, you have things that are creating profits to offset the reduction in valuations. On the tech side, when we're more in the digitization, AI, cyberspace, we're kind of in real tech land, and we've seen a pretty significant contraction in multiples, I think, due to the changes in rates. Where do you stand on that? How are you communicating with investors and clients as to where we are in the cycle and how you think that's going to play out?
Yeah, absolutely. So rates have definitely been the largest headwind for technology this year, and it's a real fundamental headwind, right? Like when we analyze companies, it makes a big difference if you're using a 1% risk-free rate or a 3% risk-free
Right.
rate. So what we see today is that the currently announced hikes and the 10-year at 3%, that's already priced in the stocks. Now the question is there going to be more than that, right? Like, can the 10-year go to 5%? We don't think that's priced in, but we also don't think that that's very likely. And then the other point I would make, just because the economy is not strong enough, so at some point the Fed will have to pull back if they're not seeing the
Right.
response that they're expecting. And then the other thing I'd point out is in an extreme scenario, say for example, the Fed rate is at 10%, right? That would imply that there is a problem with the US economy, right? So it's not necessarily a problem with the tech stock in focus. So I would almost much rather own a stock like Nvidia or Autodesk or somebody that's generating cash flow and has a technology that's going to be there for a long time rather than invest in like a 10% yield on a government bond, right? So there is a level of this is a risk-free rate, but if the 10 years stops being a proxy for risk-free, is that really the right metric that people should be using in their models? So we think like using a 3% rate is a good level. It's a long-term level for modeling, but there's certainly risk, especially in the near term. If rates go up, like you will see it reflected in valuations.
Yeah, and people should know that and understand that. And hey, if we look at it from where it was in November, those technology stocks represent a pretty significant discount. So all of that growth that was priced in last November that you paid for up front, now we've had that growth kind of push out into the future a little bit. So, you've got a little bit more downside protection if you're looking at making investments today
Yeah.
in these types of vehicles, all things being equal. And nobody knows where rates are going to go and whatnot. So, that's a prognostication that we can leave for the financial media to speculate on with certainty, where there is none. So maybe we can jump in a little bit too.
Yeah.
We've talked a little bit of digitization, decarbonization, robotics, AI. So I look at the portfolio and I don't see Palantir, and I'm not in this space, but my head tilts and I wonder why.
Well, we actually do own a little bit of Palantir.
Oh, you do? Okay.
But the reason why it's not a top position for us is because their business model is not as scalable as the rest. So if you look at some of our top holdings, the businesses just scale themselves. In Palantir's case, each contract they win, they actually need to negotiate, talk to the company, pitch the value add, and that really already creates a lot more friction than if you have a technology like Snowflake,
Mhm.
where anybody, like we use it today, where we're like, okay, you create an account, you get direct access to the cloud, you can store your data, you can run analytics. So it's a lot more scalable and with a lot less friction. So that would be the one pushback that I'd say for Palantir. But on the flip side, they have a pretty solid defense business, and that's the reason why we initiated the position more recently over the past few weeks. And basically, we feel like defense is going to go through a cycle, and we're trying to find good stories there. So yeah, that's the case for Palantir.
Yeah, very cool.
Yeah.
Learning right there. I'm learning.
So across, Ivana, across your themes, it's pretty clear now in our conversation that you have both some of the direct plays, but you also have a lot of upstream plays as well. Like in the uranium story, you have Cameco, and then do you have any I don't want to necessarily focus all of our conversation on uranium, but are there any uranium related plays like nuclear power or these modular reactors. Is there anything like that in your portfolio that goes along with the commodity itself or the producers?
Nothing in the current portfolio, just because a lot of these companies are not large enough for us
Right.
to be investing in. So there is some interesting technologies, but a lot of them are not at the scale that where we can comfortably underwrite a position. But really looking across up and down the value chain or up and down the supply chain is exactly what we do. So you will see the same pattern applied to traditional industrials,
Right.
right? Like sometimes there would be a traditional industrial company that has cool technologies, like TransDigm is an example. So we like the reopening trade, but airlines have become a little bit tricky to invest in because oil price could have further upside from here, right? And that's a big part of their cost structure. So it's really become a game of timing oil price versus with somebody like TransDigm, they provide components for the aircraft and they have very solid margins. They made cash flow even through the COVID pandemic. So we like that type of story where like we can play the reopening, but we also have the protection from the cash flows. So we do a lot of that, like going up the supply chain and going down the supply chain. And going into this year, we actually had a lot more traditional like value plays or more traditional industrial companies. But what happened was through this downturn, those held up a lot better versus the growth stocks got just completely destroyed. So if we look at the upside downside in the technology space, we saw limited downside, but still some, right? Like there's still downside to like potential for higher rates. But like they could be 2-3 times return opportunities versus for industrials, we saw good upside, but also the economy is not really going to be that strong. So decent amount of downside. So we always try to assess the upside downside when we make an investment decision. And at this point in time, our portfolio is a little more growth weighted, just where stocks are today. But that could definitely change as a lot of the industrial stocks are getting hit right now. So that is an area we're like focused on and trying to pick out good businesses at a discount.
Are you limited to the themes or the segments, the sectors that you have represented in the strategy right now? Or are you free to move in and out of different styles or companies or producers, like for example, Cameco, being an extraordinary item in your portfolio? Are you able to do that freely, or are there constraints to what you can include in your portfolio?
So we are able to move freely. We have no constraints from that perspective. We have concentration limits, so we can't
Okay.
be overly focused on one subsector. So we're pretty diversified across a range of industries and markets. But yeah, absolutely. We're trying to, it's by design, trying to be able to move to where we find the best alpha opportunities.
And maybe you could walk us through the portfolio construction. So we've talked a little bit about the specific names, finding that hidden gem, transitioning between, some areas that may have lower valuation or just lower betas versus higher betas. But you've got a portfolio that's sort of 60%-ish in the top 10. That's a very conviction weighted portfolio, got lots of active share there. I personally, that's the way I would like to invest. If you want a broad market index, go get it for 5 basis points. You're looking for someone to do the work and find these significant growth opportunities and steward them as they grow. So how do you think about that in the portfolio construction? And so, you've got the different themes, something qualifies, and then something unique and very different qualifies. Are you actively looking for those unique diversifiers of the portfolio? We're saying, oh, I've got enough tech, digitization, AI. I actually need some plays that behave a little bit differently. So walk us through the portfolio construction side.
So the portfolio is by design very concentrated, and it is filed as a concentrated strategy. That's not a very common feature.
Right.
The indices are very, very diversified. Um, So what we're trying to do is find the best ideas. So really, like if you when people invest, this is just one component of your portfolio. So nobody should really be like putting all their
Yeah.
money in industrial technology or so we view our products as a small part of a portfolio, and therefore we are overly concentrated to our high conviction ideas. In terms of diversification and different styles, we try to be diversified across teams. So we will, right now we have we're a little overexposed to like cybersecurity, for example. So we would try not to have more of that specific theme. But we are like, there is no like limitations in terms of the portfolio construction. So if there is a theme that we particularly like, we can definitely have larger exposure. And the way we mitigate risk is not necessarily by diversification, but by doing fundamental research and picking stocks that do have scale, as I talked about, volume in terms of trading volume, right? So we try to pick ideas that are kind of staples and leaders in their respective markets. So there's always risk, and these are all very risky investments. I'd add. But yeah, we try to find the ones that we think are gonna generate differentiated returns.
So the explore part of the portfolio, leave the core to the other folks, and concentrated bets. Anything specific in your portfolio today that you feel is particularly under the radar or not? And maybe you'd want to tell this. So obviously, if you had something that you had a small position in, it was under the radar. Don't tell us. Get your full position. But anything that you've got your sort of full position on, where you're looking at it saying this is particularly opportune. I think not very many people understand the way we're looking at, industry sector A or, stock X, if you want to mention a specific situation, but up to you as to how you want to frame that. But anything out there that's particularly interesting?
I mean, nothing really to call out. I think all of our teams are pretty interesting. Really, the main aspect here is how interested people are in adding risk to their portfolio on the growth side. We're definitely overweight growth. We think this will, looking back, be to that 2022 will end up being a great time to have been investing in growth stocks. So
Yeah.
whether it's today or in 3 months from now, like we can't really call the bottom, but I think the underlying theme that we see across the portfolio and where most opportunities are in this beaten down growth stocks that really do have either they're cash flow generative or they have very strong gross margins and unit economics. I think that's an area where people are kind of shying away and going more towards the mega caps, but there is really a set of stocks where you don't necessarily have strong free cash flow yields, but the gross margins are really strong. So if the company wanted to run it for cash flow generation, they could. So we really like that. I think that's kind of maybe the most underappreciated part of technology and industrial technology more specifically. But yeah, I think that the entire portfolio has decent amount of upside, and we cycle through ideas quite a bit. So if we're not seeing the upside that we're expecting, we will just rotate out of that and into other ideas.
In a past interview that you did recently, you talked about the example of General Electric as a company that had gone, and then of course General Electric fell pretty sharply, and then recovered on a reorganization. Do you have any examples? It was a particularly interesting one because GE transformed itself into as you said, a high-end aviation business, among other things. But do you see any other stories like that are interesting reorganization stories within your portfolio?
Not necessarily today. I'd say G is probably we don't own G right now,
Right. Yeah.
just for full disclosure. But not necessarily big turnarounds. I'm trying to think. Yeah, I don't think so.
Yeah, other than the fact that technology stocks have gone through this revaluation this year. That's a
Yeah, I think that's really
yeah.
been the trade. I mean, there is few stocks that are on my radar for transformation. One would be Facebook for sure. Basically, they are a play on the metaverse, right? Like people really got excited about that, but they don't necessarily have the technology to back
Yeah.
that. And we think the metaverse is going to be a really promising opportunity. But the question is, what is the actual strategy, right? So now that the stock is down to attractive valuation levels, the question is there a story? Because we don't necessarily just invest on valuation. Like there needs to be some sort of a
Right.
transformation, or some sort of a thesis. So yeah, that's what that's maybe one that we're watching. But for the most part, the industrial technology stocks that have been getting hit, they haven't necessarily had earnings downside. So it's not been the case where things are completely falling out of um, the fundamentals are completely falling apart and there's transformation opportunities. It's really more been rates driven decline.
Yeah.
So
It's the little R.
Yeah.
It's that darn little R in the discount cash flow calculation.
yep, exactly.
Hate that little
Yeah.
R. Well, or yeah, you like it, whatever. I wonder if we could, I want to come back to I want to get to some of the research that you published, but before we go there, and we've talked about the portfolio and the approach and the 5 sectors and some of the sort of market dynamics that are currently here, but I'd love to talk a little bit more about the firm, how you've set it up, how you're sharing research. What are the pros and cons with that mindset that you've sort of endured or experienced? Endured's probably the worst word. That you've experienced as you've started with that. And how did you come to the conclusion, or how did you think of, hey, let's get out there. I'm going to start my ETF.
Yeah.
I'm going to share research more openly. I'm going to have that, seems to be a theme. There's a few companies doing that. We do that. We share a lot of our research. And so take me through the journey of how you came to that decision and what the pros and cons have been thus far.
Yeah, sounds great. So my background, as I said, was doing research. So I spent 10 years on the buy side investing in companies, and the investments were very similar to what I described, very fundamental, high conviction. And I did that for about 10 years. And then I spent a few years on the sell side at Deutsche Bank and Gordon Haskett, where I published research. And I managed the portfolio while I was at Gordon Haskett of industrial technology idea just with my personal money. So this would not necessarily be the companies that I was researching. They would be companies that play up and down the supply chain. So that portfolio grew in size to a point where I was asking the question, well, is this really my optimal setup, or should I really be just focusing on the portfolio and publishing the research so people can stay informed? So I really like that aspect of it. A lot of the research that I do as well is pretty open. So I do talk to a lot of competitors. I go to industry conferences. So I meet a lot of people. So in a way, it helps when I publish research. People come to me and they're like, oh, I've noticed the same thing, that they have this new product, or I noticed the same thing, that that they could have a new competitor. So I think that aspect of the research being open and available for everybody is definitely kind of core to the way I perform the research.
And what have been the pros and cons of that, of being so open with the research? Has it all been sunshine and rainbows, or, is there a price to sharing everything? Well, what's your sense there?
I mean, my experience so far has been pretty positive. Yeah, I don't know that there is any cons. So I think it's important for investors to stay informed. I think the way our strategies, we're not a typical investment advisor where we have clients that we really advise on things. So it's really more about learning and being comfortable with the space on your own. And then if you do like what we're doing, you can always explore one of our public products. So that's really like our setup is so that it is important for people to learn about the space before they invest, just so they can know what to expect in terms of like the risks and opportunities.
Amazing.
Yeah.
And then a couple of recent pieces that you've got out now, I think are a bit of fun. One you've touched on with the metaverse and Facebook. So, which I love this space. What are your conclusions from digging in? How real is the space? How long is it? How relevant is it in a timeliness fashion? Who are going to be the big players? What are your thoughts?
We believe the metaverse is going to be a huge opportunity. We think we're in the very early innings of it. So we've been trying to stay focused on companies that provide the building blocks rather than platforms themselves. So what this means is that in order for you to create a metaverse or to create 3D content, you need tools and hardware, right? So companies like NVIDIA will provide the GPUs that run something like a metaverse. They recently launched a product called Omniverse that allows creators and engineers to combine all of their software tools
Right.
and create these interactive experiences. And another company that we like is Unity, which is traditionally been used as a gaming platform. So if you're making any independent game today, especially if it is on a mobile device, it's most likely built on a Unity platform. So now the company can take that platform and use it as a building block for building a metaverse. So some of the metaverses built today, like Sandbox, for example, are actually built on this gaming platform. So we think in the long term, there is going to be huge opportunity. We find the industrial aspect of the metaverse underappreciated. We don't hear many people talking about that, but we think that that's a pretty easy use case where companies started talking about Industry 4.0, industrial companies 10 years ago, but the technology wasn't there to back it. And today, with all these tools like the Omniverse that I talked about, companies can really start very easily creating digital twins of their operations that they can then use to optimize their operations, cut costs, and so on. So I think it's going to be a very important technology. We are focused more on the building blocks and the industrial side, but there is opportunities across the board.
Yeah, it's one of those areas that all the people with the assets haven't really invested much time understanding, or it's
Are you talking about Warren and Charlie?
Yeah.
Specifically, is that because they?
Oh yeah,
They don't like this space at all. It's like steroidal cancer infected on a.
It's kind of like the same people who said who needs a computer in their home,
Yes.
right? And
Yeah.
although
I think Warren did say that.
yeah, yeah,
Yeah, it's going to be interesting to see because I think people misunderstand what it means.
Yeah,
right?
sure.
It doesn't mean that like, okay, no more social interactions. We're all going to be going in virtual coffee shops, right? There is real use cases for this. So I think a lot of it is going to depend on the use case. And yeah, I feel like a lot of what's been developed so far is maybe not as high quality as some of the investors would like. So they kind of shy away from it, but that doesn't necessarily mean that that's where it ends. I think there's going to be a lot of opportunity for development. And I think you brought up a good point on M&A. A lot of the large companies have pretty strong, like the large tech companies have pretty strong cash flows, but they're maybe have lagged a little bit behind on staying current with technology and staying current with trends. So we see M&A as a big potential here for them to try to acquire some of these companies now with valuations where they are. And that could be really transformational. Like if you can buy few companies, few of these like growth stocks that are down 50-60% from their peak, that in itself can create a lot of value for shareholders.
Yeah, especially when you're long on cash flow and short on sort of innovation and new growth areas. So it makes a lot of sense for that to start to occur. Is there anything that you could share with everybody to help them bridge the gap to what the metaverse can be versus, this etherealness that
Yeah.
everyone's like, well, we're not all going to gather at some bar stool at a thing. And I'm like, well, yeah, you are if you're at a video game tournament and yeah, there'll be advertising and yes, there'll be a person there from whatever brand you could imagine. But can you help make it more real than that? I mean, that's my silly example.
But that's
I'm
already
sure
happening,
there's
right?
so many
I
more.
mean, that's
Yeah.
already happening. I've heard so many conversations now around this where, the talk is about how, Gen Z are, meeting up. They're having meetups in the games, in the platforms, in their
Mhm.
favorite game. And so if that's the vision of the future that the metaverse people are witnessing, then that seems to be already starting, and that's kind of what they're building or trying to build on, is let's make that world more virtual and let's make it more as realistic as we can, so that they want to do that even more.
Yeah, absolutely. There is a lot of use case. We just published a few months ago a metaverse primer on our website. It's pretty short, just gives kind of an overview of how we think about the metaverse. And there is definitely real use cases today from the industrial side. So one example is BMW created a digital twin of one of their manufacturing operations based on the NVIDIA Omniverse platform, and they said that they achieved 30% savings improvement in throughput. So these things are real. They just take time for them to get broader adoption. And as well, the other technology that's pretty interesting, that's somewhat related to the metaverse, but it could really help it go to the next level, is blockchain technology, right? So now you have this technology that enables you to identify assets in a way that you were not able to identify and encrypt before. So we believe these smart contracts play a pretty significant role in building the metaverse, and they're going to really help enable a lot of these experiences.
That is amazing. I'm
Mhm.
excited for that. I think that amplifies the social connections too, because when and also research connections. So you're gonna create a plan, and you're gonna look at it through the lens of how do I increase efficiencies. And you don't have to actually create the plan. That's pretty interesting.
Yeah, and you
And
can
people can
collaborate with people from different
all
parts of
over
the
the world.
world. You're all working on the same file. Yeah, these things were not possible 2-3 years ago and are possible today. So there's definitely value to it. Now, some people have some crazy projections in terms of what the market will ultimately, the market size will be. I think the NVIDIA CEO said that he thinks the economy could be larger than our current economy. I think it's too early to tell what ultimately the size will be,
Yeah.
but we're definitely seeing use cases and adoption. So I think that's an encouraging sign that there's maybe more to come.
Yeah, there's a reality to this.
So
The other thing before, go ahead,
yeah,
Peter.
you're during the pandemic, there was a number of, of course, we saw how the pandemic disrupted supply chains, um, for one. And then secondly, there was also a number of cyber attacks that happened during that time. And, with both situations being sort of on the same playing field in the end, where a supply chain disruption happens because of shutdowns, or a shutdown happens because of a hack. Um, the cybersecurity theme is another theme that you've spent a fair bit of time on. Um, Maybe talk about that, because I think that's also another area where the understanding is really, it's under, or misunderstood, or not fully understood, just how critical this risk is.
Cybersecurity, especially post this geopolitical concern, has definitely become more of a focus. But even without, I think the important thing to understand is that even without geopolitics, the real change that's happening is that companies used to have all their data in one central location. And now the data is all over the place, and their employees are all over the place. So that's just a completely different change in architecture of how you're doing business. So that increases the number of vulnerabilities. by multiples, right? Like
Right.
it's not double. So the cybersecurity solutions that people used 2, 3, 5 years ago are no longer relevant. So you have new companies coming up with innovative solutions, and the market is pretty fragmented. So it's not like you can say, "Oh, I'm just going to do research on this one company, and that's going to be the solve all the cybersecurity problems." So companies work together all the time. So you have endpoint security. Those would be companies like CrowdStrike, SentinelOne. Those are the innovators. And then you have cloud security, which would be a company like Zscaler. So they will actually secure your access to the cloud or the access between different workloads in the cloud. So there is just an ecosystem of providers all doing slightly different things, but the majority of them, or at least the ones that are doing innovative solutions, have pretty good stories. So the market itself is growing at a double-digit CAGR. So it's a pretty interesting space because if you're outgrowing the market by 500, 600 basis points, it makes it for very, very solid opportunities there. So yeah, it's another one where we did a primer. It's on our website and just kind of provides a basic lay of the land of what are the areas that we find to be most attractive.
With that kind of outside potential growth, are you seeing valuations reflecting that, or is this a really interesting area from the balance of growth and price paid?
Yeah, so we don't see the valuations reflected in it because these are growth stocks again, right? So they're caught up in the same sell-off that everybody else is facing, while their fundamentals are significantly improving. So we don't see them like down 80%, like some of the consumer tech is down.
Yeah.
So they're just kind of down more in line with the market. But we see this as a huge opportunity. So it's a pretty significant part of our portfolio and focus. And it's exactly because of what you described. Fundamentals have significantly improved while the valuations have compressed just because of where rates are today.
Well,
Fantastic.
yeah. I mean, there's this issue of national security is one, but then there's also the need to protect supply chains. We saw what a physical disruption did to supply chains and how that brought inflation forward. But if a foreign attack, a foreign cyber attack on key infrastructure, for example, like the pipeline hack that happened last year, is if it happens in any greater frequency, the disruption to the economy is massive.
Some of the management teams that we talk to are highlighting the point that previously a lot of these attacks would be ransom based. So
Yeah.
the attacker would be just wanting to get a payment, which is not good, but at least it's solvable. It's a lot worse what we're seeing today, where people are trying to inflict pain, right? So it's not even about like just payment. They just want to cause disruption of your system in a geopolitical uncertainty. So that's really what we've been hearing from cybersecurity management teams, where their customers are coming to them and it's really like not even an option for it not to be secure. They're not doing the math. Oh, how much does it cost to protect versus how much I would need to pay out? It's really more like this needs to be as secure as possible and set up as well as possible. The other one is the SEC is requiring companies to disclose cybersecurity attacks. And that's a big deal because you don't want to be the one with the loose security system, right? So I think it's putting pressure on management teams to make sure that they're doing the best they can.
We get at least 10 or 15 attacks a day on our website, which is not critical infrastructure. But of course, if it actually succeeded, we as a company would be in trouble. But it's a daily attack, and on a monthly, I think in the worst month we had something like 50,000 attempts to get into our server.
Yep.
And I mean, we have it firewalled and redundant, and we have all these different measures in place in order to prevent these kinds of brute force attacks and password attacks. We're not harboring sensitive data, but But just by seeing that firsthand happening on our website makes me realize, this is something that most people just take for granted unless they've actually experienced it themselves. I'm sitting wondering why are we getting 50,000, attempts to access our back end? Why?
Yeah, no,
Right?
absolutely. Like I think
But
attacks used to be focused on large corporations,
yeah,
and now it's everything. So the people realize, the hackers realize that mid-sized companies maybe don't have the security systems in place compared to
yeah,
larger enterprises. So everybody is basically a target.
yeah. So if we're getting 50,000 attacks in a month, how many attacks are S&P 500 companies getting on a regular,
Yep.
on a regular basis from offshore? So you see that just, for me, that just heightens the opportunity or the need for it, the need for cybersecurity. And we're not talking about Norton or McAfee. We're not talking about antivirus on PCs, but of course everybody should have those things running. But when companies are vulnerable and key infrastructure is vulnerable to cyber attacks, you can see where the opportunity is only going to increase in value over the long term.
I agree. I just wondered if there was any fun stories that Ivana wanted to share from her days on the hedge fund
Yeah,
side with places like
absolutely.
Tiger or Millennium or Citadel or
See,
Kepner.
you deliberately
I
avoid.
left it to the end,
Yeah.
but I want to know.
I
I want to know if
Yeah,
there was
I'll
anything
share a
fun
fun
that
one
happened.
from
Yes,
Deutsche Bank.
please.
Yeah.
Where
Perfect.
we so we were basically the team that called the downfall of the stock, the GE stock. So it was funny that you mentioned
Oh,
it,
okay.
before. We basically went through the financials and we were like, wait a minute, this is not what people think it is, because they would disclose earnings that were not really comparable to the way other companies disclose earnings. So when you do like EPS type calculation, none of those profits were actually real. They were accounting profits based on some assumptions. And then we downgraded the stock, and that followed with them actually, and the accounting standard changed. So they were like, oh no, you actually have to report as any other company. And that caused a huge decline in the stock price. So that was probably one of the most fun projects that I worked on. And then the other one was 3M and their PFAS liability. So we were basically the first team to uncover a gigantic, but it could potentially be $100 billion liability for the company, where like nobody, like it was disclosed but not really, like you could see like the cases, just the mentions in the 10K increasing. So we're like, oh, maybe we should like dig into this. So we emailed the company. We didn't hear back. We're like, oh, that's a sign. Like if the company
Come on, guys, you
there.
got to get back right away. If you have
Yeah.
something to hide, you can't hide
Yeah.
it.
Exactly. So we did a huge like deep dive, went to court hearings. I mean, this thing is everywhere. Like it's basically, it's unintentional, right? Like it's unclear who knew what, when. That's still kind of up to debate. But what's clear is that it needs to be cleaned up. So 3M was the only manufacturer for several number of years. And then they decided to stop. And then DuPont was like, no, maybe
Yeah.
we'll do it if you don't want to do it.
This is, yeah. I mean, so
the
just to
whole
be
thing
clear,
is like was
yeah,
a bit surreal in
Yeah.
terms of what went on.
this is the dark.
But,
You're just to be clear, you're talking about the dark waters story. Yeah,
so
exactly.
Dark Waters is part of it.
Yeah.
So basically there is few branches that it's really become like a big problem. One is this foam, AFFF it's called, that's part of firefighting foam.
Right.
So basically every airport or every location where firefighting foam has been used is contaminated. So it's become a huge liability for the DoD, right? Because they have all these sites where they do training. So that's one part. And then another one would be contamination from sites. So the site itself could be you could have had like leakage. So the case with the dark waters, that was close to one of the DuPont's manufacturing facilities.
Right.
Right, but it's not isolated to there. It's literally everywhere where this product has been used.
I hate
Fun
watching
times
those
in
things.
industrials.
Yeah. I grew up near Love Canal. It's
Yeah.
industrials. Yeah, they're the good, the bad, and the ugly. What are we gonna do?
Exactly.
Anyway, that's awesome.
Yeah.
That's a great place.
Ivana, where can people find you, your company?
So I'm on Twitter. The handle is @Ivana Spear, and LinkedIn as well.
Perfect. And the website address?
Yeah, spear-invest.com.
And we gotta pump up her followers, everybody. Let's go. Go find her on Twitter and give her a follow.
Absolutely. Fascinating conversation, Ivana. Thank you so much.
Yeah,
Yeah.
thank you guys. Really appreciate
Thanks
it.
again.